In this video, I will share with you everything that you need to know about backtesting, and in part 2, I have also prepared a live backtest where we go over a few charts and live backtest a specific strategy. If you want to jump ahead to the live backtesting, then just jump ahead to the timestamp that shows up on the screen now. But I would recommend sit through the first part because there I have included a lot of practical tips for you. So the first question is, what is backtesting? And backtesting pretty much means that you come up with a new trading strategy, or you have found a trading strategy and you want to test if it is profitable or not. And then you take that trading strategy idea and you go back in your charts, maybe you go back for a last 1 year or 2 years, and you test the strategy on historical price information to find out, did the strategy make money last year or not? So why is that helpful and why is it recommended? First of all, it's always a good idea to add new strategies to your portfolio. However, I find the biggest benefit of backtesting is that it can bring some creativity to your trading and it can help you break out of your routine. If you have been trading for a few years and maybe you have a profitable trading strategy already, you will know that trading can be very repetitive. Many traders say it is boring, it's very dull, because every day you're essentially just doing the same thing day in and day out. And to mix things up, I find it very, very helpful to think about new strategies. Maybe you're reading about a new strategy somewhere in a book or in a forum, and you just want to have a new item on your to-do list, on your calendar, so that it is not the same old routine every single day. There are quite a lot of things that traders can and will do wrong in a backtest, so I have prepared my 5 most helpful tips on how to approach a backtest. So first, set expectations in the right way. Most trading strategies will fail, and I have tested hundreds and hundreds of strategies in backtests over the years. And I found out that only a small amount is actually going to pass a backtest, is going to make money in a backtest, and then you can take it to a forward test. However, a lot of traders don't have the right expectations. They believe or maybe hope that the first strategy that they're going to test is already going to make money, and then they have found something that can make them rich. And obviously, if those expectations are not met, then you're setting yourself up for failure. It's going to be frustrating. It's not going to be a pleasant and fun experience. However, if you roughly know what to expect, if you understand that, okay, not every strategy that I'm going to backtest is going to make money, then you can approach things way more relaxed. Try to break a strategy. So now we're getting into very, very important scenarios. When you test a strategy in a backtest, you can test a year worth of data maybe in 2 or 3 hours over the course of a weekend, which is great. It's a very short amount of time that you need to put in to estimate, is this strategy potentially profitable or not. And you want to make sure that only the best of the best strategies is going to pass your backtest, because the backtest takes such a short amount of time, whereas if you then apply the backtested strategy to a forward test, which means that you're going to trade it in a live market, this is going to take weeks, and in some cases it's going to take months of time. So you want to make sure that the strategy that you have found be profitable in a backtest is truly profitable, and you don't want to waste your time with a potentially losing strategy that you could have already eliminated during the backtest, and it's going to cost you weeks. And we're going to continue with the next points on that. And one of the ways how you can do that is focus on losses. It's very easy to brush over a loss in a backtest. And I have seen it many, many times in my own backtesting, in the traders that I mentor. It is easy to overlook a loss and then to have a performance in a backtest that is way too good. And then you take that strategy and you forward test it, and then it completely falls apart because you have missed a lot of losses. And the strategy that was so profitable in the backtest should have never been so profitable in the backtest. So really pay attention to as many losses and as close to all the losses that you can find. If in doubt, add the loss to your performance, but never leave out a loss. It is okay to sometimes maybe, if in doubt, leave out a winning trade. That's totally fine, but make sure that you find all the losses. Be overly pessimistic and critical. This ties in with the previous points. You really want to make sure that you catch all the losses and that no losing strategy is going to pass your backtest, because this is going to cost you weeks and weeks and weeks of your time. So you really want to make sure that only the best of the best strategies is passing your backtest. And don't get attached. I've seen it a lot of times in my own trading and also in the traders that I mentor. When you do a backtest, you celebrate a winning trade and you get upset about the losing trade. However, it should be the opposite, because you really want to make sure that you find all the losing trades. When I find the losing trades, I'm not excited, but I know that this is the right path. I don't want to overlook a losing trade. And if I find a losing trade, I know that I'm doing it the right way. I'm not using hindsight bias or any other bias that might influence my decision making or my analysis. So don't get attached to it. Be very agnostic and be very objective when you do a backtest. And now let's jump into the live backtest. So now we are in our backtesting setup, and obviously you can rearrange it, but for the sake of this video, I will follow this format. So on one side, I have my Edgewonk journal open, and here I will navigate to the backtester. You can open the menu, go to your backtester, and here we will record our results. So what we want to do here is create a new backtest, and then you can see a new area pops up, and under information, I just want to capture the basic stuff about this strategy so that when I come back to the backtesting at a later point, maybe in a few weeks, in a few months, I can still remember and find out what this backtest and the strategy was all about. And here on the left side, we have our trading view. This is the strategy setup that we're going to test. I'm going to talk a little bit about what this strategy is so that you can follow the system and follow the trades. Here are the rules, and the rules, basically what we can do is we can just copy them over to our Edgewonk. So we just copy them, go back to our Edgewonk, and here what we're going to do is we can say we tested the British Pound Aussie on the 1 hour. Our rules are as follow. And what we also could do is indicators used. So we can really nicely recap then later what we're going to use. And when we see here in Edgewonk in trading view, we have the 50 period SMA. And here we have a stock of 1413. So very simple. SMA 50 and then the stock of 1413, and that's all we need. Another thing that we could write down, which would make a lot of sense, is starting date of the backtest, and this is exactly 1 year ago, or roughly 1 year. It's the 31st of March 2022. So this is helpful when you come back later so that you know what you have tested, the market, the time frame, and the period as well. So this is all we need to get started. And what I will do now is, for the sake of this video so that you can follow it, is I will squash this a little bit to the right here. And the only important thing for now is when we do the backtesting is we need to know the outcome, or we need to write down the outcome from our backtesting trades. So this is the area that we will focus on, and then later we can see the graph. But for now, we just want to make sure we can record the outcome of our backtested trades. So I want to make as much real estate possible and viewable for you. So I will shrink my Edgewonk a little bit so that I can still access here the trades and the outcome fields. And then here on the left side, we have trading view. And as you can see, here are very basic rules. And this video is not so much about the strategy that we are backtesting, but it's about the process so that you can take any strategy, any idea that you're using and backtest on your own. So what we're going to do is we wait and we go long when the stochastic is entering overbought, and we are going short when the stochastic is going into oversold, which is below 20 and above 80. So this is more of a trend following approach. Also, we want to make sure that we enter new trends only. So we wait for the market to cross below the 50 if we want to go short. And then we look for the first time the market reaches oversold. And if we go long, such as here, for example, we wait for the market to cross above 50, and the first time the market is, or the stochastic is in overbought, we go long. Again, it is not so much about the system. I just made up the rules on the fly, and I really want to get across the process of how you backtest, not so much about the strategy, because there are obviously endless strategies that you can use. So this is just one idea, and it's only about the process in this video, since we are learning about how to backtest and how to set yourself up. So I have Edgewonk on the right. We will go through a few trades and record them and then see what we can learn from it. And here we have trading view, and I am in the replay mode, as you can see here. Replay mode is set because I started here 1 year ago. And then we just go forward. You can see very nicely in TradingView it's possible to fast forward. So you can see the stochastic is getting below 50 slowly. And what happens is if the stochastic is below 20, then we will go long, short, and if it goes above 80, we go long. And now would be the time to go long because you can see the market reset the stochastic. We dip briefly into below 50. Now we are back 50. So technically this would be a long position. And the way you could use it, for example, we put our stop loss simply below the 50. Again, it's not so much, I'm just making up the rules because I want to show you how the process works. And then the cool thing about the edge-wrong backtester is you have 2 columns here for outcome 1 and outcome 2. So for example, in outcome 1, and we should write this down. What is outcome 1? Outcome 1 is a 2-to-1, let's make it like this, 2-to-1 reward to risk ratio with the stop loss below the 50 or above in case of a short, above SMA 50, and then the target is just 2 times the stop. So very, very simple. Outcome 2, and I would recommend to track something significantly different from outcome 1 so that I can see the dynamics and see what changes here in the outcome. For example, we could use a trailing stop. So an open-ended target, we don't have a fixed target, so we use a trailing stop below or above the SMA 50. So that way you can very nicely compare the different outcomes. It's also a good way to save yourself a lot of time. I would always recommend, if you're doing the backtesting, record different outcomes so that you can get twice as much information about the system. So you don't have to do 2 separate backtests, but you can track everything at once. So you can see what we're going to do. The market is going up and up. So here in this example, we would have reached the target for the 2-to-1 outcome, so the first outcome. And obviously in outcome, you could record how much money you made, you could record how much percentage maybe, how many pips. But what I find most helpful is to just record it in terms of reward to risk ratio. So since we reached the 2-to-1, and actually it was much sooner, I was a little bit off here. So here's the 2-to-1, we would have reached 2-to-1. Our outcome 2 is still running, so as outcome 2 we are trailing behind the moving average, so right now our stop loss would be kind of here. And obviously there are countless ways how you could trade a stop loss, how you could use your target. So in this example, our stop loss, we are trailing it always alongside of the moving average. And let's see, here we are out, so you can see here's our exit, and an easy way to find out how much money we made or lost is here 1.27. So we can see and record this, and then over time we will wait for more trades. Another thing that you could do is just go here and click on the camera icon, save chart image, and you can see this will be automatically saved to your downloads folder typically, and then later you could store your results and your screenshots. In the future in Edgewong, it will be possible to also add your backtesting screenshots, but for now it is not possible, but it will come. So let's keep going. Let's get rid of the drawings. Not about this. So I want to keep the line here on the stochastic. And now we'll just fast forward. And you can see we already should have gotten a short trade. But at this time, you can see when the stochastic was in below 20, we were still here above the 50 period moving average, and this is not in the rules, so not a valid signal. So now we wait for a next signal. So here you can see the market is back in overbought. It is actually, and this is nice in TradingView, you can just go back and see, okay, where was the entry? Here not. No. Yes. So here is technically the entry. Short position, long position. We are back below the 80, so let's wait for the market to fully go above 80, which is now confirmed. Let's move this. We don't need this anymore. We have it here, so just let me, for the sake of clarity, remove it. Stop loss below the 50. You can factor in a little bit of spread if you want to do that. And we are starting with the 2-to-1, which is here. And we can zoom in a little bit and then just fast forward and see what we have. Here we have a loss, so you can see the market spike through it. And in this case, we have trade 2 is -1 and -1R. Again, we are recording in R multiple terms. And you can see this updates. You can save a screenshot for later purposes. And we wait for the next signal. Now we have to wait for the stochastic to reset. We are still, okay, now we are below 50, but we're not below 20 for a short, not yet. Not yet. Not yet. Sometimes TradingView pulls back. You have to wait a little bit in TradingView to get the full candle. It takes up to a second actually. Oh, okay, here we were, I was a little bit too early. So here would be trade 3. And again, I just made up the rules on the fly because it's just about the processes. It's not so much about the system. So here again, we're following the rules, stop loss below the 50 period moving average. And obviously you can do whatever. Then we have a 2-to-1 reward to risk ratio. This would be trade 3. And let's see. Turn around. And this. Sometimes you want to turn off the labels to see it clearer. So in TradingView you can actually do that. Always show stats, you can just turn it off. And then you can see when you take a select away from it, then the stats come off, and only if you hover over, then it comes back. So this is the first here, don't get mixed up. -1 and -1. All right, so you can see we are trade 3. Again, save your screenshot for later. It's always helpful and nice to have them on the hands. I will speed up the process, but keep you in the loop. I have now collected 10 trades in Edgewonk. Here you can see now how it looks. You can see that the two line graphs have updated. You can turn on and toggle off a specific outcome if you're interested in only looking at one. You can hover over to see an idea of what is happening. You have a few inputs here and metrics, 10 trades, winning trades, losing trades, break-even trades, the win rate for both systems. Outcome 1 has generated 8R. Outcome 2, 8.1R. I may have been not 100% accurate on the trades, but the point is to show you how to use Edgewonk and how to backtest a strategy. I would also recommend to maybe have a few more trades. Now we are at April 29, so we have roughly tested 1 month of data. So you may want to add more trades. You can do that very easily in Edgewonk. You just click the blue plus and then you can see you get more trade rows here. You can toggle them off or delete them. And that is then how you can have everything in Edgewonk, all your trades, all your missed trades, and also all your backtests in one place. So Edgewonk is more than just a journal, but also a complete trading suite suited to help you in all aspects of your trading.